Yo, I ain't here for the money, I ain't here for the fame. Though it might be nice to own a jet plane, I'ma do it all for you.
Traders, I got your watch list for June 21, 2023. Stocks start the short week to the downside. Equity markets finished lower, giving back a bit of ground after a strong gain last week that brought the S&P 500's weekly winning streak to 5. It was a quiet day on the data calendar and in the headlines, keeping the market's focus on the undercurrent of Fed policy ahead. Interest rates were slightly lower, with 10-year Treasury yields moving below 3.75%. Most sectors closed in the red, with energy and materials the biggest laggards amid a drop in commodity prices. Overall, with no new news or themes to drive the market's direction, we're not surprised to see some softness to start the week given the sharp run in equities of late which, coming into Tuesday, saw the S&P 500 gain more than 7% in just the last month. Additional perspective on Fed policy. Fed Chair Powell will appear in front of Congress on Wednesday and Thursday for his semi-annual testimony on monetary policy. We don't expect any new policy information to come from this, but it will give markets an opportunity to hear additional perspectives on the Fed's thinking on inflation, the health of the economy, and the decision to hold rates steady at its June meeting. The Fed's latest decision can be characterized as a hawkish pause, in that it kept rates unchanged, ending a streak of aggressive tightening, while providing an outlook for additional rate hikes ahead. We suspect this week's testimony will pull out some additional perspectives on what the Fed is watching to determine its next moves. We don't expect any sharp reactions in the financial markets, but stocks are likely to remain sensitive to Fed commentary in the coming weeks as expectations for further rate decisions are recalibrated. Housing data surges. Housing starts spiked in May with 1.63 new homes starting construction, an increase of nearly 22% from April and up almost 6% from May of 2022. New building permits were 1.49 million in May, up from 1.42 million in April. This offers a leading indication of upcoming construction activity. Weather may have helped, but we suspect the pullback in interest rates through March and April may have spurred some renewed demand for housing. The housing market is well off of the peak activity levels of 2021, but the rebound in construction and permits suggests housing investment may be stabilizing despite the broader deceleration in the overall economy. Fed's Powell to testify to Congress as new housing construction surges. The chairman of the Federal Reserve will appear before both House and Senate committees this week. Barely a week after the Federal Reserve put a hold on its year-plus campaign of raising interest rates to levels not seen in decades, Chairman Jerome Powell will be back in the spotlight again this week as he treks to Capitol Hill for 2 days of testimony before Congress. Powell will offer his twice-yearly report on monetary policy and the economy on Wednesday to the House Financial Services Committee, then reprise his remarks to the Senate Banking Committee on Thursday. Markets will be looking for Powell to offer some guidance as to the future path of interest rates, as inflation remains well above the Fed's target of 2% annually and the labor market is still tight by historical standards. Powell's comments come in a week dominated by data on the state of the housing market. On Tuesday, the Census Bureau and the Department of Housing and Urban Development reported that residential construction improved in May. Housing starts rose 21.7% to an annual rate of 1.631 million, while building permits increased by 5.2% to an annual level of 1.491 million. Meanwhile, the National Association of Home Builders said on Monday that its monthly confidence index rose 5 points to 55 and is now solidly in positive territory. The surge in housing data indicates a positive trend in the construction industry, reflecting potential stability in the housing market. The increase in housing starts and building permits suggests a renewed demand for housing, possibly fueled by the recent pullback in interest rates. Although the housing market is not at the peak levels seen in 2021, the rebound in construction activity provides a ray of hope amid the broader economic deceleration. Chairman Powell's testimony before Congress holds significant importance as it offers insights into the Federal Reserve's stance on interest rates and the overall state of the economy. With inflation surpassing the Fed's target of 2% and a tight labor market, market participants eagerly await Powell's guidance on the future trajectory of interest rates. Powell's remarks will be closely scrutinized for any indications of potential rate hikes or adjustments in monetary policy. As Powell prepares for his congressional testimony, he faces the challenge of balancing the need to address inflationary pressures while maintaining economic growth. The Fed's decision to pause its aggressive tightening and keep rates unchanged signals a cautious approach. This week's testimony will likely provide additional perspectives on the factors influencing the Fed's decision-making process and shed light on the indicators they are monitoring to determine future actions. In the midst of Powell's testimony, the focus on the housing market remains prominent. The positive data on residential construction indicates resilience in the face of economic headwinds. The increase in housing starts and building permits suggests that the construction sector is poised for growth, potentially contributing to economic recovery. The rise in the National Association of Home Builders Confidence Index further reinforces the positive sentiment in the housing industry. Turning our attention to the watch list, let's analyze the performance of the mentioned stocks. First, let's look at Walt Disney Co. The stock experienced a decline, sliding 1.72% to $89.75 on Tuesday. This was its second consecutive day of losses. The stock closed $36.73 short of its 52-week high, achieved on August 16. In comparison to its competitors, Walt Disney County underperformed, with Apple Inc. rising 0.05%, Netflix Inc. increasing by 0.63%, and Comcast Corp. falling 1.36%. Trading volume for Walt Disney County exceeded its 50-day average volume of 12.7 million, reaching 14.7 million. Next on the watch list is JD.com Inc. The stock traded lower on Tuesday, experiencing a decline of 6.73%. Reports emerged regarding the company's long-term vision, indicating its expansion into various sectors such as logistics, healthcare, e-commerce, and online finance. JD.com plans to create 7 listed firms with significant market values and aims to achieve substantial sales and net profit targets. Despite intensified competition and the impact of restructuring, analysts believe that JD.com's overall performance will likely exceed initial growth estimates. Lastly, let's focus on PayPal Holdings Inc. The stock received positive news as private equity firm KKR agreed to purchase a substantial portion of PayPal's Buy Now, Pay Later (BNPL) loans in Europe. This deal is expected to generate significant gross proceeds and is set to close in the second half of the year. PayPal shares were up 1.7% following the announcement, and the company plans to allocate funds for incremental share repurchases. The deal with KKR removes an element of risk for PayPal and is viewed as a positive move for the payment processor. In conclusion, Tuesday's trading session saw a decline in equity markets, signaling a temporary pause after recent gains. All eyes are now on Chairman Powell's congressional testimony, where his insights on interest rates and the state of the economy will be closely scrutinized. The surge in housing data provides hope for the construction industry and indicates potential stability in the housing market. As for the stocks on the watch list, Walt Disney County faced a decline. JD.com is undergoing strategic restructuring amid intensified competition, and PayPal Holdings received positive news with the KKR deal. Investors will continue to monitor these stocks in the broader market for further developments and opportunities.